12 o'clock. Thank you for joining Finance Friday, coming to you live from beautiful Charlotte, North Carolina. And today we're focusing on PPP2 and all of the other economic aid that came out of the Economic Aid Act that was passed in December. There's a quick bit.ly link if you need our help with forgiveness, bit.ly/easyppp. That'll get you to us. And you can use my email address at any time, david@diycfo.biz.
And David, I dropped that link in the chat window. So.
Oh, thank you. Yeah, great. So what do we call this thing? This is the economic aid package. That's just the shorthand that you'll see the SBA using, calling it the Economic Aid Act. There's the big long real name, and it includes something really interesting that we're just getting started on, which is to understand the stimulus for venues. That is live music performance places, movie theaters, destinations, people who host weddings and that sort of thing. So if you're a venue, there's some special stuff in this act for you. But we're calling it the Economic Aid Act. It was part of the Consolidated Appropriations Act. All right, what did that Economic Aid Act have in it for us? $284 billion for more PPP. Plus, don't forget, when we ended the PPP last year, there was still $135 billion left. So there's over $400 billion up for grabs on PPP. More money for the economic injury disaster loan, more money for those grants to venues we were talking about, and a bucket of other, $1 billion here, $6 billion there. It must be something, I don't know what it is. But please keep in mind, as we go through all of this, the process of what's between you and that $284 billion. Congress passed the law in December. The SBA is issuing rules as we speak. They came out with more on the 8th, and on the 13th, they had a big IFR and new application forms and all that stuff. So SBA is still processing some of this stuff. Then they got to get it to the bank, who actually determines the procedures and processes that you use to apply. And the bank has to gin up their websites to make it all fit. And then finally, you get to log into the bank websites and apply for your money. And then it goes through some more machinations, and finally you get paid. But there are important dates for you to know. On the 11th, that was last Monday. Yeah, on Monday, the SBA started accepting applications for PPP1 from community banks. So that's for people who never got any money before but wanted to try this time, and only from community banks. You had to have a $1 billion or less in assets under management to qualify. So small banks. January 13th, they let those same small banks apply for PPP2. And finally, the rest of us get to come to the supper table on January 19th. That's Tuesday. So today's Friday. That's this coming Tuesday. 4 more days, and everyone will be allowed to apply for a PPP2. So in the meantime, we're going to talk to you about what's here for you and how to apply. Well, there were 8 main things we're going to touch on today that came out of the stimulus bill. The simpler PPP forgiveness for those of you who already have it. No taxes, right? That's the big win that we were all waiting for, that says the PPP is not taxable. It actually extends to all of the programs we're going to talk about today. There are no tax implications for any of these programs. The AID Act, as we've already said, had more money for PPP1, and a second draw is what we're calling PPP2. So you might see SD, second draw, or PPP2, or several different second round of PPP. People are using different words, but the law's word was second draw. They've announced an audit plan for people who have in aggregate received at least $2 million through the PPP program. So all the larger companies will be audited, and they'll be announcing the exact method for that audit. The law included that the EIDL advances will not reduce PPP forgiveness. We'll talk about that specifically. It included more money for the EIDL. So if you did not get an EIDL last time, that program was set to close on December 31st. It's now reopened until December 31st of this year. So that's the disaster loan. The DL there stands for disaster loan, up to about $150,000. It's a 30-year loan, and you apply on the SBA website. So there's plenty more money there. And finally, there's the ERTC or ERC, the Employee Retention Credit. We're going to touch on all of these things But that ERC, man, that is a big one, and that's the last couple of slides we got. Let's start with changes in the forgiveness. So if you already have a PPP loan and you're ready to get forgiveness, as was my friend Hang, they've announced several things that are going to make it easier. First of all, a simplified process for loans under $150,000. The law calls for your banks to ask you just 3 questions. How much was your PPP loan? How much was your payroll approximately during the covered period? And about how many jobs did you save? I mean, it's a ridiculously simple set of questions with no math required. You can take a stab in the dark and submit this and supposedly get approval for a forgiveness of up to $150,000. Obviously, remember my waterfall slide that says this starts with the law, but it goes through all these branches before it gets to the bank and to you. So obviously the banks still have to implement those things. So it's up to the bank. And more rules will be coming out about that around the 20th, middle of next week. So the forgiveness also allowed us to add qualified expenses to our forgiveness applications. So you got a $100,000 PPP loan. If you were only able to spend, say, $60,000 or $70,000 of that on payroll, you were scrambling around to find other expenses to make up the difference, and you were allowed to use rent and utilities, and that was about it. Now you can use all of the software costs that it takes to run your business, including payroll fees, Microsoft Office 365 licenses, QuickBooks Online costs. So whatever software you use to run your business can now be, the monthly expense of that software can now be included as a qualified expense. Damage costs, if your business was damaged during the riots, and you had to pay something not covered by insurance, that can be a qualified expense. Supplies, now this is a big weird one, but you can imagine people put out purchase orders and ordered a whole bunch of stuff before COVID hit. So you're a restaurant and you just ordered $100,000 worth of steaks and vegetables, and now then COVID hit and you got closed down. All of those costs can be included. There's some different rules about the supply costs, so if that pertains to you, you'd want to read a little more deeply. And finally, worker protection expenses. So that's the personal protective equipment, right? The big plastic dividers between people, the masks, gowns, face masks, whatever, gloves, hand sanitizer. You can lump all of that into worker protection and claim that as a qualified expense. Finally, this seemed like a really big change. In my opinion, it's not, but it is important to understand we were all complaining, can't we use 12 or 14 or 16 weeks as our covered period, because we were trying to hire people and bring them all back, but we were afraid we were going to run out of money and our number of employees was going to fall off towards the end of the 24 weeks. Congress finally said yes. If you've hired people and you managed to keep them employed for 12 weeks or 16 weeks, that's great. We're going to give you credit for that. Don't worry about the fact that you had to then lay them all off after 18 weeks. You can avoid the penalty by picking your own covered period as long as it's at least 8 and no more than 24 weeks. So, and it will, of course, as before, begin on the day you receive the money, the disbursement date of the loan. So that was pretty cool. Okay, so those are the big changes in forgiveness. Next, we're going to talk about one in particular that I like, which is this no tax rule, very important. The new law says PPP is not taxable as income, but also the expenses are deductible so that there is absolutely no tax impact from the PPP. Before, the IRS was saying that those expenses, the payroll and such that was covered by PPP, were not deductible on your tax return. That was clarified by Congress. That's no longer true. So you will pay no taxes on the PPP. It does, however, increase your basis. That's an accounting term that means how much have you invested in your business. And so if by including the PPP, your bottom line number, right, becomes profit, that increases your basis in the company. And you need basis in order to take losses on your tax return. In order to claim a loss, you have to have invested the money that you lost. And so this is it's a little bit esoteric, but it's very important and really, lucrative change for us that the PPP does increase your basis. And finally, they were very magnanimous to say, these changes change everything. PPP1, PPP2, disaster loan, disaster grant, and even the SBA payments that were being made by the SBA on your existing SBA 7A and 504 loans. So the last year the SBA made 5 or 6 monthly payments for you on any SBA loan, and that's going to happen again this year. By the way, you're going to get another 5 or 6 payments made for you, and all of that is tax-free. There is no impact on your taxes. You'll figure your taxes as if that never happened. Okay, gosh, Steve, you want to take a slide? I need a quick drink of water here. So this is our kind of global changes, right? The new rules that apply to everything.
So the topic now is getting a new PPP loan, whether it's a first draw or a second draw. There's a change in the definition of ownership. The original requirement was anybody who owned anything was an owner, and those owner wages, the significance is the owner wages are subject to significant caps. So if you owned anything, you were an owner. Then if you owned 5%, you were an owner. Now the new rules are you have to own at least 20% in order to be an owner. And that's consistent with SBA policies and other programs. Originally, of course, the only thing available to you was 2019 wages. Right? We're going to get a loan that's some multiple of what we spent on wages. Originally, of course, it was just 2019. Now you can use 2019 or 2020, whichever is more beneficial. And I think even trailing 12 months, if that helps you out. In calculating those wages, you don't have to apply the owner caps, but you are subject to the $100,000 per employee limitation. There are some increased loan amounts. The multiple in general is 2.5 times your average month's wages. But for restaurants and hospitality, anybody that has a NAICS code of 72, starting with 72, can get 3.5 times. So it's an industry that's been really hard hit. They need more money. I'm happy they're going to get it. Partnerships can now include partner compensation that was excluded before. The calculation method for seasonal business has become more favorable. There are some changes in the rules for multiple entities, and that has to do with first determining whether you meet the size limitation and number of employees. And the simple answer, I suppose, is if it's common ownership, you have to aggregate all of the entity, all of the employees and all of the entities and be under whatever size limitation is in place for that particular program. The exception of that is restaurants, and they are only limited by the number of employees per location.
Yeah, very good. And that's a pretty difficult topic, right? All of this aggregation stuff. If you have something that needs to be aggregated, then we suggest you call us or call an expert, because there are some weird rules around that, right? Oops, sorry. Okay. So the PPP loan amounts between initial draw and second draw here, right? We're talking about PPP1 and PPP2. What's the difference? As Steve just said, hospitality gets 3.5 times. So that's the same for both of them. The first round, you can still get up to $10 million if you qualify. Second round is limited to 2 million. Maximum employees, 500 for the first round, 300 for the second. And then this really important is the eligibility, the revenue reduction. So there was no requirement for you to show any damage or harm to your company when you got the first one. You just had to be a company with payroll, and they assumed that you needed the money. For the second one, you have to show that your top line revenue, they call it gross revenue, declined by 25% in any one quarter of 2020 compared to the same calendar quarter of 2019. I've got a lot of questions already on the board here about can our quarter be non-calendar quarter? Can it be something other than March 30th, January, February, March, April, May, June, July, August, September? Can it be a non-calendar quarter? I don't think so, particularly if you are a calendar year taxpayer. I don't think you can make up any 3 months that you want. Have you seen anything else that would contradict that, Steve?
No, I did a little reading on that yesterday to try to clarify, and all I've seen suggests calendar quarters.
Yeah, I think it's pretty clear, and thank you, Bart, for that question. But yeah, I think it's pretty clear that this is a tax quarter calculation. In fact, they've talked about using your quarterly 941s and that sort of thing to reconcile these numbers.
So, David, I think it might be helpful to clarify on that previous slide.
Yep.
That there's some confusion, I think, about the second round and the second draw and PPP2. What the heck are the distinctions? So on this slide, this whole slide is about new money for this year, new money made available by the new law. Some people, anyone who missed out on PPP last year, the first go around, this is going to be an initial draw. It's going to be subject to the same rules as as last year, with a few exceptions which favor the borrower.
Right.
And the second draw is for people who got PPP1 and need more money, and that is also available. And it seems like it's being made pretty easy to get.
Yeah. We should add, I didn't put on here eligibility. It does require you to show a decline in revenue quarter over quarter, year over year, right? But it also requires that you have spent all of the PPP1 on qualified expenses. This is really weird. When you apply for forgiveness, you have to spend the PPP on qualified expenses during the covered period. To qualify for PPP, you simply have to have spent the PPP1 on qualified expenses, not necessarily during your covered period. So it's not saying you have to get forgiveness first before we can give you more money. It says you have to have spent all the money we gave you the first time before we're going to give you any more. It's a weird distinction there, but for some people who dragged their feet about reopening in June, July, August, and now they were sitting on that PPP1 for a while, and they hired a bunch of new employees in September, October, November. Maybe they didn't spend it all during the covered period, but they still spent it all eventually by November, December. They spent it all. Now you can apply for more. Don't worry about whether you're going to get forgiveness on the first one. Just assure the SBA that you have spent it on qualified expenses. Okay, how do we prove all of this to the bank? And by the way, we do recommend, if you're going to apply for PPP2, that you go to the same bank you did the first time. By doing that, the bank is able to use all of the documentation you uploaded the first time. If you want the same amount that you got the first time, you don't have to load any new payroll information. You do, as I think I've said, you do have the option of loading new payroll information if you'd rather use 2020 payroll instead of 2019 as your basis. But anyway, our advice is go to the same bank, get the same amount, do the same thing, use it the same way. And if you apply for less than $150,000, there is absolutely no new documentation required. You will eventually have to prove your gross revenue decline. That's a quarter in 2020 that was at least 25% less than the same quarter in 2019. You'll have to show that, but you don't have to show it now. You'll be able to show it later when you apply for forgiveness. I'm suggesting that you do calculate it now so that you're sure you qualify and you don't step in it, right? You don't take out a $150,000 PPP thinking you're going to have free money and then you realize you didn't qualify. Now you got to pay it all back. That would kind of be a black eye. So if you're requesting more than $150,000, you will have to prove that gross revenue decline when you ask for the money. So when you get the loan, you'll have to show your quarterly books. That means a QuickBooks printout, right? Quarter by quarter income statement or profit and loss that shows your quarterly revenue during 2019 and 2020 so that the bank can compare them and say, yep, you were down. And you can back that up with bank statements that show deposits into your account that were also down quarter over quarter. So these bank statements might take a little more work. The banks are asking you to circle the deposits that represent income and notate deposits that might be your equity investments or something else. But nonetheless, that's the most documentation that I've seen them require so far. I hardly even want to talk about this one, but if you got $2 million by February 10th, the SBA will be telling us how they're going to audit you, and they are going to audit you. So I assume if you've gotten a big loan like that, you probably know about this already. The EIDL advance, this was the $1,000 per employee grant. Most people got about $10,000 if you had at least 10 employees. And previously, I had always told you that it was deductible from PPP forgiveness. So if you qualified for 100% forgiveness of your $1 million loan, you'd still have to pay back the $10,000 EIDL advance grant. That is no longer true. These things have been completely separated so that the grant is the grant. It's free money. You get to keep that. The forgiveness is the forgiveness. It's free money. You get to keep that. And they don't cross paths anymore at all. In addition, as we keep saying, it's not taxable, falls under the same rules as the PPP. It would be counted as neither income nor will it impact your deductible expenses. So it's absolutely free money. Nothing.
And David, I think this is a topic that was really misleading, because when you went to your bank portal, you filled out your numbers, you saw the forgiveness amount down at the bottom of the page, you figured, okay, I'm good to go. But somewhere there's an asterisk that says, oh, by the way, we're going to deduct your EIDL advance from the figure we just showed you. But
it was confusing, and it still is confusing, because on the application form today, they still ask for the EIDL advance amount. I'm like, come on, guys, just be done with this. Don't. Okay, might be confusing, but it is non-taxable, and it does not reduce your forgiveness anymore. So we're finally at Steve's favorite topic, the employee retention tax credit. And it's our favorite topic because it's just so damn much money. You wanna talk through this one, Steve? I'll type some answers to questions.
Absolutely. And I really want to preface this by saying this is not a topic where we're really super informed. PPP, as David said, we've just done a tremendous amount of work. The ERC we haven't looked at because, in the first place, we're not really tax experts. In the second place, it's a new topic for us, right? Until the new law, if you received a PPP loan, you weren't eligible to claim the employee retention credit. So now it's available. So how does it work? It's a payroll tax credit. It's calculated and claimed on your 941 quarterly payroll tax returns. The eligibility is really complicated. There actually is a limit on the number of employees. You do have to demonstrate an impact from COVID-19 or a revenue decline at quarter over quarter versus 2019. You can't use the same wages for the ERC that you use for the PPP. And that's creating a lot of questions for us about how to make sure when we file forgiveness that we haven't used up those wages. And there's no guidance on that yet. So the way that it would work, if you got a PPP loan, if you think you have excess wages that weren't all used for your PPP forgiveness, and that's very likely because the employee retention credit is available for over 40 weeks of payroll compared to 24 weeks for the PPP forgiveness. So you've got at least a full quarter of wages that you can use. I think we can move on to the next slide, David.
Sorry, yep, there you go.
So how does the math work? You are eligible for, and of course, it's different for 2020 and 2021. So you receive a credit per employee of 50% of the wages that you paid them, up to $10,000
of wage.
Of wages.
Yeah, for $5,000 per employee, right?
Yeah, so that's this is a significant amount of money, $5,000 per employee in 2020, and it goes up in 2021 to 70% of the wages that you paid them. And it's available over 2 quarters, so it's as much as $14,000 tax savings per employee. So the maximum credit in 2020 is $5,000 per employee. 2021, $14,000. Here's the qualified periods, right? 40 weeks in 2020, and at the moment, 6 months in 2021. You do have to show a revenue decline to be eligible. And for 2020, that's significant, 50% revenue decline. And in some industries, the restaurant industry, for instance, that they're going to be able to do that. This is going to be tough for some people to meet. In 2021, that goes down to 20% decline in 2021 revenue versus 2019. That'll be easier. I think this will be open to a lot more people. There is a headcount limitation in 2020. If you have less than 100 employees, then your entire payroll is eligible for the tax credit. If you have more than 100 employees, only the wages you paid to people for not working are eligible for the tax credit. In 2021, that goes away. We believe the limit is up to 500 employees. So tons of money available through this program. And if you think you might be eligible, you absolutely ought to be talking to your payroll provider or tax preparer or somebody about filing an amended 941s for last year.
Yeah, I highlighted that 100 people for a reason, because that is so huge. If you are able to claim $5,000 per employee for up to 100 people in 2020, and up to, I'm talking out of school now. This is something I haven't read, but is it 100 people or 500 people in 2021? I think we're still waiting to find out exactly how that math works.
Yeah, at the moment we think it's 500 people.
So can you imagine claiming your full payroll for 500 employees and getting $14,000 of credit for each one of those people? That's $700,000 tax credit for a 500 employee firm. And it comes back to you in cash. Even 100 employees, right? Sorry, I was doing the math wrong. 14,000, 500,000, $700,000 to you have 500 employees. 100 employees at $5,000 is 500,000. No, 500 times 10, $5,200,000. Did I do that right? If you have 500 employees, you get $5 million credit.
500,000 for 100 people, and 5 times that, so $2.5 million for 500 people.
Times 2, because it's a $14,000 credit next year.
Oh, good point.
Yeah, so you're looking at like a $5 million tax credit. I mean, I should be happy, but I'm also angry because this tax credit appears to be coming out of my Social Security savings and wiping out our Social Security Administration. Remember, it's a tax credit against payroll taxes, which is FICA, FUTA, Medicare, Medicaid, and Social Security. So there might be some terrible train wreck waiting for us in 10 years when all these, what do they say? The cows come home to roost, or the chickens come home to roost. Do cows roost? I don't know. So that's a big number. That's why we highlighted it. Make sure that you take advantage of this. It could be $500,000 for even a relatively small company. Okay. We've talked to you about PPP. We've talked about EIDL and grants and loans and the employee retention tax credit. How do we link that all together? Well, so first of all, you've got to understand that these are 4 separate opportunities now. The old law used to link them together in different ways. Now they're completely 4 separate opportunities. The only linkage is that you can't use the same payroll dollar for more than one of these programs. So I can't use the PPP dollars to pay payroll that I'm then going to claim for my employee retention tax credit. I have to spend all the PPP, and then I start counting my employee retention tax credit. I get all of that out of the way, and then I can go for the WOTC or something like that. So we don't know all of the details about all these programs, but we would like to suggest the following strategy, that you think about this in a pyramid. The smallest dollars, let me start at the bottom. The biggest dollars are with the PPP. So if you qualify for a PPP or a PPP2, absolutely apply for that first. Use those dollars for payroll first. And then start thinking about the work opportunity tax credit. And that's not something I want to go into today, but you can evaluate whether you are qualified for that. Then look at the employee retention tax credit. Almost everybody's going to qualify for that. And then finally, apply for the EIDG or EIDL grant. That's the smallest amount of money on here, would be the grant of $10,000 or even the loan of $100,000. Since it's a loan, you have to pay it back. But that's going to set your strategy, right? You start with the PPP, you get the big loan next, you then determine based on your PPP1 forgiveness, you can determine whether you're eligible for ERTC, use the remaining payroll to get your ERTC, and finally look to those other programs like the work opportunity tax credit, that sort of thing. So think about them all separately, work on the PPP first, use that money, and then determine what else you are qualified for.
And the logic behind this is pretty simple, right? The PPP loan, your salary dollars are going to be rebated at 100%. With the ERTC, they're going to be rebated at 50% or 70%. So first, you want to get that full forgiveness on your PPP, but there is a whole strategy to think through. Some people are payroll limited, some are not, and we want you to get as much of this. We know you need the help. We want you to get as much of this money as you can.
Right on. Okay, man, that's our last slide. It's time to take some questions. Jeez, there we go. Time to take some questions, and we have some doozies lined up in the Q&A box. I'll tell you right now, folks, we've got 75 questions to go. We're going to try to plow through them, but we are going to stop a little after 1 o'clock because we just got other things we got to be doing, and frankly, my voice gives out by about 1 o'clock. So, all right. So starting at the top, another nonprofit gives out rental assistance. Now I would like to apply for the second round of PPP, but since I'm giving out the rental assistance money, does that count for showing the 20 to 30% reduction per quarter? So that's an interesting question. The revenue for a nonprofit is not what you give out, it's what you brought in, right? So they're asking whether your donations have declined over 2019. If your donations into your nonprofit have declined, then you might qualify for the PPP2. There were also, and I didn't drill down on this because most of our clients are not nonprofits, but there was also a new kind of nonprofit allowed to apply this time. I think it was called a 50C36. Did I say that right? So anyway, please do investigate it, but again, the qualification comes from donations in, not the donations that you make out. Okay, so Victor says, can I help him apply for PPP2? He's already started with Lendio. Hey, Victor, we're happy to help. Send me an email at my email address, david@DIYCFO. I'm sure I can answer questions for you, but it really should not be an issue. You should be able to, okay, there's two calculations, right? Calculate your payroll, your average monthly payroll times 2.5, and calculate your revenue, whether it has declined year over year. And that's about it. In fact, if you apply with the same bank as the first one, you shouldn't even have to calculate your payroll because it's already at the bank already knows what your payroll was and they'll just give you the same amount. Can a company that's in Chapter 11 apply for PPP2? Steve, I think that's an absolute no. The company has to be operational, but you know, bankruptcy is a peculiar thing. Is a company who's filing for Chapter 11 operational, or are they reorganized? Are they dead, or are they reorganizing?
I think this is one of those questions where we say, we're not really sure. You need a different expert for that. Certainly, if the company is out of business, you cannot get the PPP.
Yeah.
If you're in the process of reorganizing, I don't know.
Yeah. Okay, Michael Dubin, we are not certified to give you CPE credits for this webinar. I'm sorry, but I'm sure this is a hell of a lot better than any of the CPE credits you've you've gotten this year. Okay, my employee count decreased after I used all of PPP-1. When applying for the 2, do I use the new employee count and my reduced rent and those things? If I have to use the higher employee count, do I need to hire to meet that for full forgiveness? Yeah, that's the strategy, right? So you need to decide. You are eligible for the higher amount based on 2019 payroll. The government would like to see you spend the PPP-2 to get back to that level of 2019 payroll. And the forgiveness will ask you if you got up to that 2019 payroll the same way that PPP-1 forgiveness asks that now. So yes, the FTE count is still going to be part of the forgiveness process. And if you get a loan based on 19 payroll, the forgiveness will be based on 19 payroll. You have an opportunity, though. You are allowed to use 20's payroll if you want a smaller PPP loan, or you could just ask for less money. I suppose that might come out in the wash also. But I would use the old numbers, because now there's so many things you can include in qualified expenses. It would be hard not to qualify for forgiveness at the end of this. You still got to hire people. You still got to bring them back. You're still shooting for that baseline number, which was 2019. But
so I think from a social perspective, you absolutely use the 2019 20 amounts, get the higher loan, hire some people. There are 20 million people out of work right now. Put them to work doing something useful for your company. Absolutely.
Yeah, and if you've reduced salary, as your follow-on question said, then increase salary. Put it back in there. Okay, Stu says his company started in October of 19 and was closed for 4 months during 20. When calculating the PPP-2, is there consideration to exclude the closed months in the loan amount calculation? Yeah, Stu, folks who don't have payroll for the full year of 2019 do get some special consideration. In fact, one I saw said you can use just January and February's payroll to calculate your average payroll for the loan application. Given that you started in October, I don't know whether there might also be maybe October, November, December, or maybe the average between October and February. Steve, anything come to mind in that regard?
Yes, I was just reading about that and found some wisdom that if you don't have 12 full months of payroll, take the number of months that you do have and calculate the average of those months.
Okay, there you go. So any month, so October, November, December would count then, I guess, right?
Yes.
Great. All right. So John wants to clarify, can you apply for 2 before you've gotten forgiveness on 1? And the law says yes. Now, before our webinar started, Hang told us that she had gone to Citibank and they were requiring people to file and complete, to file for forgiveness with them before they got number 2. That is clearly contrary to the interim final rules from the SBA. These 2 events are not connected. They're not supposed to be connected. You may apply for 2 regardless of your status of 1, so long as you have already spent all of number 1 on qualified expenses. If I need to buy new software, should I wait until after round 2 funds, or can I spread it from prepaid expenses? I'm not sure I understand that, but if you need new software, when you buy it, doesn't impact your ability to use it as, well, you can only use qualified expenses that occur during your covered period. So if it's software that you buy, then yes, wait until you get the second loan to buy the software. If it's software that you rent and you're going to pay rent every month, doesn't really matter when you start. You'll only be able to claim those expenses for the covered period. So might be a good strategy to wait. That's not a bad idea. Anonymous has a service business and was shut down at the end of March of 20. Since our clients were shut down at the end of March 20, their payments came in April, and so our Q1 and Q2 do not meet the 25% reduction, but May and June and July are 25% below 2019. So January, February, March, April, May, June, July. No, so I think what you're saying is, can you use May, June, July as a 3-month quarter of the year? The answer is no. But if your May, June, and July results are that far down, then perhaps your third quarter, June, July, August, July, second quarter, April, May, June, wouldn't that quarter be pretty well impacted? I mean, I'd look again at your quarters. Maybe you just don't qualify anonymous, but you do have to qualify on a calendar quarter basis, is our understanding. All right, Jennifer, do these changes only apply to the new PPP, or does everything apply retroactively to the PPP one? Jennifer, everything we've told you is available to number 1 and number 2. So everything is retroactive unless it's better for you to use the old rules, in which case you can use the old rules. So you get the best of both worlds. Trey, when do you get basis? The date of the PPP loan or the date of the PPP forgiveness? Trey, if you're asking on a GAAP, right? You want a real CPA answer for like a public company. It gets complicated. What GAAP will say is you realize that income when you believe your forgiveness has been earned or is imminent. And so if you believe you're going to get forgiveness, then it becomes income and you increase your basis. That's GAAP, man. I pay so little attention to GAAP when we file our taxes. I told my tax preparer, if we need the basis this year, take it this year. If we need the basis next year, take it next year. I don't really care. It's a bookkeeping, for most small businesses, it's a bookkeeping detail that nobody's ever going to ask about. If you're a public company, different deal, please ask your auditors. So Hang's got a good question. She has a PPP one, as we know, and she wants to know, can she apply for forgiveness using just 10 weeks? Sure, right? The new covered period is anywhere from 8 to 24. You can use 10. That's different than, gosh, Hang and I have had 100 conversations about this in the past. And I always said, nope, it's 8 or it's 24. And now, Hang, you beat me down. You finally get to take 10 weeks as your period. So you may, yes.
The other thing that you have been saying, David, is wait till next year, and
here we are.
Here we are in new rules, and absolutely. But
that's true.
All the new rules do apply for PPP1.
That's right. So we get to pat ourselves on the back for that advice, Steve, because it really has become easier, and there's going to be more forgiveness this year when you apply. I'm still saying wait till February, March, April to apply, but when you do, it should be so damn easy that you will thank me for waiting. All right, Sally has an accounting question which says, when you talk about an increase of basis, does that mean that you're posting it to retained earnings? Sally, that's exactly what it means. I'm not going to go into that for people who don't get that, but yeah, it means that you're showing an increase in profit or a less expense or more profit in 1 year. Less loss or more profit 1 year, and that rolls to retained earnings. So yes, PPP hits your retained earnings and increases your basis. Penny, I think we've answered your question. You can apply for PPP2 whether or not you've applied for forgiveness, even though Hang had a different experience at Citibank. Chase, I think she said. Joel, can you elaborate on the current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant? Thank you, Joel, for bringing that up. I wish that we had heard more from the SBA about this. Steve, you said you heard, was this officially heard or kind of scuttlebutt heard that something about $150,000?
Oh, yes. Well, it's a good question. There's been so much information, but and it's coming to my belief anyway.
Uh-oh.
For loans under $150,000, you are automatically deemed to need this money.
Now, that's
Yeah.
the way they treated loans under $2 million last year, right? The PPP1 said if you got less than $2 million, we're just going to assume that you needed it and that the current economic uncertainty makes the loan necessary. There was some talk, yeah, there was some talk on, on the floor of Congress about, boy, we should make the PPP2 only for people who really need it. And the only thing I saw that came of that is that they said no public companies can get this money, no private equity backed companies can get a PPP2. And so they have, and they put the emphasis on much smaller businesses. So they have limited, and they've enforced this need idea, but I haven't seen them come out and say, boy, we're going to require you to show a rejection letter from another bank that says you can't get a loan from Bank of America and therefore you need the PPP. Yeah, we're a little bit uncertain about that at this time, particularly for loans more than $150,000. All right, Mazar says, my bank asked for supporting documents for payroll and revenue. What can you provide? What should I provide them? And I think we answered that, Mazar. I think a simple QuickBooks printout showing your revenue and the bank statements that support that, showing deposits being made into your account, will suffice to support the revenue. And of course, for payroll, what they ask for is a third-party report for payroll. That means the payroll processor that you hire needs to print a report with their logo on the top, right? Paychex or ADP or JustWorks, whoever you use for payroll needs to send you a report that shows the either total paid during the year or whatever it is that you're paid during the covered period, whatever it is you're trying to prove. So third-party payroll reports, but your accounting records for the revenue supported by bank statements. All right, Kyle says, if our bank did PPP1 but is not yet open for PPP2, can we apply with an online provider and then take can we apply for the online provider and our bank and take whichever one comes first? We saw some of this happen under PPP1 where people applied to multiple places, and I think it all worked out in the end. I didn't see anybody who actually got 2 loans. I think the SBA knows whether you got it.
I think that's a clear yes. You can apply multiple times. You can only take 1 loan, but you can apply multiple times.
That's right. And they'll know by your EIN number whether you've already been given an offer or not. So it's likely you'd only get 1 offer, I would think.
Well, and there's quite a process between being approved and actually having the money show up in your bank, right? You have to sign loan documents and so forth. So
that's right.
Yes, apply multiple places. Don't take the money more than once.
Yeah, that's right. Don't take the money more than once. All right. Philip Bergen asks if can you use any period of 8 to 24 weeks for the forgiveness for both number 1 and number 2, PPP 1 and 2? The answer is an easy yes. It's up to you to decide what covered period to use. Now, I'll say this again. I don't think it really matters. Longer period is probably better and easier, whatever payroll reports you've got, unless you have a concern about an FTE penalty. So you've laid people off and you aren't reaching your full employment again, then that's when it's going to benefit you to use a different covered period. Okay, Deborah Albert says, can owners' wages be included in the total average wage up to 100K? Yes, Deborah, we were talking about that this morning, weren't we, Steve? You and I.
Yep.
So absolutely yes. When you apply for the loan, it includes all payroll. Please address the exemptions for FTE. Our company utilized the first PPP and afterwards we had to lay people off. We'd like to use the second, but understand we may be exempt from the FTE reduction due to decreased sales, not having the space to safely have our employees in the office. We are not restaurant and hospitality, however. So yeah, you're talking about what's called safe harbor I believe it's safe harbor number 1. I sometimes get my numbers backwards, but anyway, it's a safe harbor that says your business was unable to operate at the same level of business activity because you were complying with COVID regulations, right? Social distancing, stay-at-home orders, shelter in place, don't travel, whatever. You were complying with those orders, and therefore your business was impacted, or you were unable to operate at the same level of business activity. If you can claim that for either 1 or 2, you don't have to do the FTE calculations, and you will not have an FTE calculation penalty. In fact, what that means is you're allowed to lay people off, but you still have to spend all of the money. You still have to spend everything that they gave you on a qualified expense, and at least 60% of what they give you on payroll. So if you just go lay everybody off and they gave you $500,000 and you don't have any payroll, you're going to end up with a loan. So you got to be careful there. You got to keep bringing people back in order that you have enough qualified expenses. Thank you for that. Katrina, does the PPP allow you to use 2020 payroll for PPP 2? Yes, that's an easy yes. You can use either 19 or 20 for the second PPP. Actually, for both, either PPPs. If whichever one you're applying for now, if it's your first time and you're doing 1, your second time you're doing 2, you can use either 2019 or 2020 or the trailing last 12 months as your basis. You have to have a payroll report in order to get the loan. Our proof of payroll, is that enough? Gosh, Steve, proof of payroll versus a payroll report.
Yeah, many small businesses don't use an outside service. They're doing payroll internally. So the bank is going to want your internal payroll register, and often they just ask for your monthly bank.
A bank statement or a canceled check?
Bank statements, canceled checks. I mean, you can prove that you paid the money.
Yeah.
And they're certainly going to want your 941.
Oh yeah, the 941s are key there. That's the quarterly payroll tax report, right? The 940s, 941s. Keep in mind though that this does not include contract laborers. 1099s are not employees. So when you say you don't have payroll reports, you still have to have actual W-2 payroll. Okay. Anonymous says, do they have anything set up for landlords since tenants are not paying? Not in this act. This is not a real estate discussion, unfortunately. I know that's going to be some serious pain for property owners, but that's not addressed in anything that I've seen.
And nothing in the SBA. None of the SBA programs cover rental real estate.
Right. Todd Levitt says, if we did not apply or get the PPP loan during the first draw, and we now apply this time around, do we follow the initial draw rules or the second draw rules? And Todd, the answer is whichever one benefits you most. So all of the second round rules apply to the first round, except for key things like you can still do it for 500 employees under the first round. You can still get $10 million under the first round. Those things became more restrictive with the second. But since you're applying for the first round, it's all of the new rules plus what's better for you under the old scheme.
Yeah, I think that's a good clarification of the terminology, because there's obvious confusion between the first round and the second round, and the first draw and the second draw. So if it's the second round, but it's only your first time getting a PPP loan, that's your first draw, and it's subject to the easier rules.
Good. Okay, so another ignorant question, John says. When you're showing Q over Q changes, should you include the PPP loan deposits? Does the PPP count as income for your quarter over quarter reduction? And the answer is a clear no, John. You are not required to claim PPPs as revenue. It's not revenue. It's not income. It does not apply to your quarter over quarter changes. So thanks for clarifying that. I know we skipped over that. I'm a bar. Oh, a bar, like a drinking bar that's been closed since March 2020. We got PPP1 and have had very little payroll in 2020. Can I still apply for 2? And can we use the funds to pay owners' payroll costs? Well, yes, you can still use your original 2019 application to get a whole nother PPP2 loan if you've already spent the first loan on qualified expenses, which includes payroll, by the way, at least 60%. And can you use this PPP2 for owners' wages? Yes, but only up to the limit of, well, it's a complicated formula, right? The owners are only allowed to have the same amount of money they took out in 2019 for 2.5 average months, the actual amount they paid themselves during the covered period, or $20,833 maximum. So in no case can an owner take more than $20,833. Call it $21,000.
So, David, I think an answer that you gave earlier is really pertinent here. You do have to have spent all of the money, all of the first draw on qualified expenses. That doesn't have to have occurred within your covered period.
That's right. Yeah, that's a good point. Thank you. Okay, Joanne Sadar says, can a law firm that keeps accrual books but pays taxes on a cash basis show the 25% drop on a cash basis? Joanne, yes, absolutely. Cash basis, especially since that's the way you file taxes, cash basis would be the way that I would show your drop in revenue quarter over quarter. Mary Tran says, about reductions of revenue, does it have to go with our tax basis? Good follow on. Does it have to be your tax basis? We've debated that, and some people say do whatever you want because there are no specific guidelines yet, but most people who are guessing are saying follow your tax basis. If you're a cash basis taxpayer, look at your bank statements and go on the cash basis of deposits. Do you have an opinion on that one, Steve?
Yeah, fact number one is that we don't know yet. There just hasn't been clear guidance. I haven't seen anything that prohibits you from using the accrual basis figures. And so if you really need that, I would
try. Yeah, try it out. I mean, what can they say? Give me the money back. That's all they can say. What if you change your tax year, i.e. switching from a corporation to an S Corp in 2019? So quarters were different from the year before. So is a quarter, now we've got a fiscal tax filer. Is the quarter his fiscal tax quarter or calendar tax quarter? I've not seen anything written on that specifically. We've all been assuming it's a calendar year, but for a fiscal filer, I don't know.
Everything I've read refers to calendar quarters. As usual, there may be clarifications coming out in the SBA's questionnaire submittals over the next months.
Yeah, very good. Harold asked me if you can have use the same quarter that you got the PPP and still show that as a reduced quarter. Yes, Harold, you don't count the PPP towards your revenue. And so however you're showing it, cash or accrual, it drops out and you can use the same time period. Sunita says, if we pay the EIDL loan before asking for PPP forgiveness on number 1, do we have to put the EIDL loan amount on the forgiveness form even though you paid it in 4 months? You paid it back within 4 months. Yeah, I think you should. They don't actually ask for the loan amount; they ask for the grant amount, right, Steve? The application, the application form wants to know your EIDL account number and the amount that you were given as a grant. So it really doesn't have anything to do with whether you paid it back or not, because that's the loan, and they're not asking for that.
So that sort of reinforces your suggestion. Just wait a couple of months, because at the moment the bank portals don't reflect all this stuff. whatever information they're demanding is mandatory. So if you go on your portal now, they're going to want to know that idle advance number and your idle loan number, and maybe in a couple of months they'll catch up with this.
All right, my friend Lane Montz asks a good question. What if you have profit in the year overall, but a loss or a decline in revenue in 1 or 2 quarters? Are you still eligible? And I think that's an easy yes. Also, it just says pick a quarter in 2020 in which you have a decline over 2019. If you can show a decline in 1 quarter, you are eligible.
Yeah, decline in revenue, not profit, is not an issue.
Oh, that's right. Yeah, yeah. I completely skipped over that one, Lane. Sorry. It really doesn't have anything to do with profits. Net profits at the bottom of the book. It has to do with revenue. But I was thinking what you meant was, even if revenues increased for the year, you could still qualify based on revenues declining for 1 quarter. So whether revenues are up, whether profits are up, doesn't matter. Revenues decline for 1 quarter is enough to qualify.
And Dave, just on timekeeping.
Oh God, it's after 1 o'clock already.
It's after 1.
These guys are killing me. What do you want to do, man?
How about 5 more?
5 more questions. All right. Let's go to Tanya Williams. How would I account for the uninsured property damages and worker protection expenses? The application does not reference any of these costs. Well, Tanya, I think you mean the application for PPP2 does not reference them, but the forgiveness application will reference them in the future when your bank is ready. All right, that's a good question. Keep collecting all of those costs. Keep a folder of documents that document everything. And then when you go to apply for forgiveness, if you follow our advice and wait till February, March to do this, your bank will absolutely have a spot for you to say, enter the amount you spent on personal protective equipment. How much did you spend on riot repairs? Okay, good question, Tanya. Thank you. Okay, I think we've answered that. So lots of you are asking, if you have 1 quarter decline, but the other quarters are not, do you qualify? And the answer is yes. Across the board, all of you guys, if you can show a single quarter decline, you're golden. Mike wants the link to our calculator. Do you happen to know the link to our calculator, Steve? So we do have a really good PPP forgiveness calculator. And I will let Steve research that by going to, DIYcfo.biz/store will give you another link. Inside the store, you'll link to grab the free calculator. So DIYcfo.biz/store. Can you put that in the chat box for me, Steve?
I can. Now, I think we should say that the calculator that's publicly available hasn't been updated with these changes. We have updated the industrial strength version that we use internally, but
the only difference that people are going to trip over might be this personal protective gear and the riot damage and that sort of thing. And there are spaces where you can put other expenses in that calculator. It's not going to say, it's not going to say PPE, riot damage, spoiled food. It's not going to say that yet, but there are spots for non-wage expenses that you can simply just stick it in there.
Right, and of course we don't have the variable forgiveness period yet, but you say correctly, I think, don't worry about it.
Yeah, that's right. Don't worry about the changing the covered period. Okay. Lots of the same questions. Jennifer says, when does your basis get increased? And I'm saying that's a bookkeeping thing. Pam wants to know, what if you did not apply for the initial draw? Do we use the initial draw form? Yeah, Pam, anybody who did not get a PPP1 uses the new PPP1 application. And you can find that on the SBA website. But yeah, the application forms for 1 and 2 are different. Number 2 is called SD. Number one has a number. What's the number, Steve? 22435J/XPDQ. I don't remember. So anyway, it's the form number one. But again, don't use the form because your bank will actually have their own application process, and you'll use your bank's portal, your bank's website, to make the application. So yeah, so that's a bank question. Victor asked a question we haven't answered yet. What period of time is the PPP2 supposed to cover? You want to talk about covered period, and I'll find our last question here.
Well, I'm not sure about the intent of the question.
Well, what's the covered period for PPP2? How is that going to be calculated?
So applications are open at some banks, right? And you'll, after your bank makes the application for the loan available, you'll receive the funds on some date, and then the covered period will be from that date for 8 weeks or 10 weeks or 24 weeks as you choose. And so there's some strategy if you want to control when that's going to occur and what your headcount is, you're anticipating new revenue, you're anticipating layoffs, there is a bit of a planning exercise you could go through. And I suppose the only caveat is going to be that there is a limited amount of funds available, and you might not want to wait too long to make that application.
Great. Here's a person who started a brand new business. If you're starting a brand new business, you simply don't qualify for any of these programs. I'm sorry. This happens to be a CPA, so I feel sorry for you. You're starting a CPA practice right now, but you don't qualify for any of the handouts. If you applied, I don't know this one, Tammy Foley, you're my favorite attendee, so you get the last question here, and it's a damn good question. If you applied for the EIDL, but were not offered an advance, can you apply for the advance now and get it? I love that because, I should I'll tack on my own question, Tammy. If you apply for the EIDL and you did get the advance, can you get another advance now? I haven't seen anything that answers either one of those questions. I was going to go to the SBA website and try because there's $10,000 on the line and it's worth trying. I honestly don't know the answer to that. Have you seen anything, Steve?
I have not. It's clear that the EIDL loan and the EIDL advance are being treated as two totally separate events. And so if you didn't get the advance on the first go round, I would think you'd be eligible to get it because it's your first EIDL advance. But certainly, why not go to the SBA website and apply? Whether you got it, whether you didn't get it, whether it's going to be your first or second, give it a try.
Great. Here's one more good one. Do we have a recording of this? I am recording it. I think I can send out a link. I'll probably put it on YouTube and send out a link for all y'all. All right. Very good. I think we should call it quits, Steve. I'm going to, I need to stop talking. My voice hurts a little, but I'm going to sit here and try to answer some of the questions that are in the Q&A box directly. I'll tell you there's 118 still open and 350 people on the line still. So I certainly appreciate you attending, appreciate your attention and your patience and your great questions. I am sorry that we can't get to all of your questions, but we are here, and you can send email to david@diycfo.biz, and I will spend the next 16 weekends responding to email personally. I think I might just be shooting myself in the head putting that out there, huh? But we'll do our best. We are here for you. We're a small team in Charlotte, North Carolina, prepared to help you with PPP and to do your accounting and finance and bookkeeping and anything else related to small business finance and accounting. I hope that you'll think of us when you need somebody, you need a QuickBooks expert, or you need somebody to help you through a merger, or to maybe find some venture capital, or just to balance your checkbook. That's what we like to do. We like to help people straighten out their bookkeeping, make better decisions within their business by doing KPIs and dashboards and financial analysis, by having the tough strategy conversations with their business owner, and by being that sounding board, that CFO sounding board that small businesses need so desperately to make great decisions. So we're here for you, and we are at DIYCFO.biz or FuseCFO.biz, F like Frank, USE, FuseCFO.com. FuseCFO.com is our accounting and bookkeeping home on the web. So I hope that we will see you all again, and watch for my next announcement. I'll try to do, Steve and I will try to do another webinar just like this in a week or two. We'll probably wait till there's some new news out from the SBA, but in the meantime, we will see you on YouTube or on DIYCFO.biz.
Yeah, thanks everybody for attending. Thanks for your great questions. We do research all of the answers, so you're helping us to be better informed. Thank you very much.
All right. Over and out. Here's my button.